Hey everybody, this is John. We're going to take a deep dive into the internals and all that kind of fun stuff here. I want to start off with Micron. So Micron, after hours, reported they were trading, they closed around 58 and change, plummeted by like 7%, but actually came back to even and are now kind of sitting there. That's actually not bad. So they're back kind of to within the expected move. I think a lot of people were expecting positive, but that's not bad. That could have been a lot worse. So that's a positive. On the negative front, there's a lot of stuff. So hold on to your seats here. First of all, the Nasdaq, which has been the ray of hope in this market, and of course got hammered today and is down another 42 points after hours. It took out its 618. Okay, so what does that mean? It was above the 618 is bullish. In between the 618 and 50, okay, is big time neutral, huge decision point, and then below the 50 is bearish. All right. Now, I don't belabor the fib levels that much, just because we haven't seen what I would call a critical and an important swing in a long time. Right? We've been straight up. This is a critical and an important swing, and all the algos are teeing off all of these levels, so we got to pay attention to them. On the S&Ps, it is very hard to put a positive spin on this. And in fact, you can't. So we broke out here. Okay, we tagged the 786 again and failed. Not a good sign. Neutral, and then today we got the break and the squeeze has fired short. Keep in mind, all right, the squeeze can head lower 8 to 10 bars. So what's happening right now is we have a retest in the works. Okay. Now that being said, the trend today was over 2. Let's take a quick look at that. And the reason this is important is the trend over 2 is truly the only oversold reading in the market. Okay. And if we want to look at and see how the market has behaved in the past, and how I look at this is that when the trend's over 2, 9 times out of 10, you are going to get a bounce the next day. But ideally what happens, and this one might sound a little odd, ideally what happens is that you gap down the next day first. Okay. So if we look at right here, okay, so big down day on March 19th, and then what happens here, that's hard to see, but you can see a small up day. So it doesn't mean that we're going to get a huge reversal, but typically when you get a 2.0 reading the next day, you're not going to melt down. Now, the other scenario of this, so 9 times out of 10, we're going to get a bounce. So my plan for tomorrow is that if we do gap down, okay, and we're going to go and look at XLF. My plan will be to cover my long straddle in XLF. We'll talk about that in more detail, because if we do gap down tomorrow, what I would call a modest amount, 15 to 20 S&P points, is modest in this market. And I'll time it a little bit using the internals. But with a trend reading over 2 and a gap down, the odds of an intraday reversal and closing positive are actually about 90%. Now, the caveat to that is that if tomorrow we have a down day and actually have a close to or worse day than today, okay, then we crash on Monday. All right, obviously that's not 1,000% guaranteed, but that's how this sets up. So tomorrow is going to be very important, and if that is the case, then I do want to have a short exposure over the weekend, because it's margin call Monday is a very real thing. All right, so what is margin call Monday? So the last margin call Monday we had was in August of 2015, actually quite a bit ago. So here was Thursday, Friday, okay, and then margin call Monday here. And what you don't really see is that this was limit down. So it actually opened limit down, it stayed limit down, and then finally started working its way off. And that's where it opened. And that's just like everybody's nightmare if they're long. And then from there you can see it worked it off. So that's just what we're dealing with here, and I always say it's good to look that square in the eye. And then, of course, the S&Ps here having a tougher time. If we look at XLP, which is consumer staples, keep in mind here, and the reason I have an interest in this is that when the market starts moving on economic concerns, okay, because the markets, The markets are very, very good at pricing in what's going to happen later down the line, right? So, 2 years ago, the market's looking at the world and saying, well, the news doesn't seem like it's great, but boy, just think of if we flash forward 2 years based on this low interest rate environment, yada, 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 the companies are going to do well. And so the stock market rides that. They call it kind of climbing the wall of worry, because if you look at the news is bad, but the market, can see kind of what's happening. And so the fact that consumer cyclicals are turning off right now actually is something where we got this unique situation where we got a combination of interest rates and inflation battling GDP growth. All right, so all the tariffs, 60 billion in tariffs that came up today, that's inflationary. And if inflation gets out of hand, there's no choice but raising rates, and raising rates is not good for the economy, and the first thing that starts to sell off is consumer staples. So keep in mind that the market is pricing in today what it thinks is going to be like a year from today. So good times there. Now, if we take a quick look at some of the positions that we have, so XLF, and again, we talked about this before. It's really important to understand kind of when you look at a setup, it's like, okay, this setup has good odds for what? Well, stacked moving averages, we were rallying, we're consolidating near the top of that rally. That's a long. Here, okay, not quite the same picture, right? We're below that trend line, we're below the moving averages. When I see a squeeze, I have confidence that there is going to be a high amount of volatility, but in that situation, I do not have confidence which way that volatility is going to go, hence the long straddle. So for tomorrow morning, in a perfect scenario, and again, keep in mind that the trend's over 2, as we gap down and into that gap, I would take off my straddle. Maybe just the put side and then see if the calls can recover, although the calls are kind of far, far away. It depends what they're worth. If they're worth 10 cents, I'll just keep them and just see if we can get something out of it. So that's on XLF. On True, okay, we picked that one up today, pull back to the 21. So why would I do that? Well, on the long side, I don't want to be long market-sensitive stocks. But I don't mind, because again, no market moves straight up or straight down. So if tomorrow we rip higher, based on that high trend 2.0 reading, I want to focus on a stock like True, which has a good structure. Okay, there's a squeeze. The moving averages are stacked, etc., etc. Another one there is Urban Outfitters. We picked up that one today as well. And again, squeeze, stacked moving averages. And then we also got FANG. Now, FANG sounds like, if you're not familiar with it, that's like, oh, is that a tech stock? No. This is an oil stock, Diamondback Energy. I don't know why they named themselves FANG. Diamondback, I thought. So, FANG. So that's the kind of stuff where I'm comfortable with that on the long side. But again, if we're going to get margin call Monday, am I going to hold on to those? Probably. It's not, I'm making small bets on these, but I'm certainly going to have some short exposure. Okay. All right. So, all right, we looked at the trend. From there, some of the key things I'm looking at as well. And I know the yen hasn't been the perfect correlation, but the fact that we've got a long squeeze setting up here and that we popped up today, that is very, very much in line with a continued weakness in the markets and a potential market margin call Monday. Okay, it really doesn't get any cleaner than that. The fact that the dollar rallied today, maybe it didn't rally. It was up earlier, but we do have a squeeze. A little bit of a flight to quality. We had gold. Gold looks like it is about to explode higher. Okay, kind of a flight to quality kind of a thing. So that one looks pretty good. And from there, of course, bonds. So the question is, oh my God, bonds, are they starting to rally here? I'm actually looking for a small pop in bonds, but keep in mind from a monthly perspective, the structure is to the downside. So any rallies here are an opportunity, in my mind, to short. Okay? So that's what we got there. And, and if we take a look here at a couple of key stocks, like you can see the ones that are getting hammered. So Alibaba, it's one that I like, but guess what? If the NASDAQ goes, it's going to go, right? Amazon, I love the stock, but if the NASDAQ's going to go, it's going to go. Okay, that's why it's like I'm buying a pullback on FANG or a pullback on Urban Outfitters as opposed to a pullback on Amazon right now, because Amazon will be dependent on the NASDAQ. Nvidia, it looks great. I love that squeeze. It's like, if the NASDAQ goes, NVIDIA is going to go. So that's the biggest problem right now, is that we've got to make sure that we're not ignoring the ocean. So the ocean, of course, is the S&P 500. The ocean is the NASDAQ 100. And I think it's critical in this kind of environment to have exposure to stocks that are not part of the ocean. And then if you are going to play in the ocean, things like long straddles in this environment make sense. All right. So we have a great group that's going to be here. It'll be a lot of fun. And if you guys are interested in this, you can go to simplertrading.com/live stream and attend the online version of this 3-day workshop for $997. And again, you get like $2,500 worth of classes. The live event itself is $4,000. So it's a great way. Somebody asked today, it's like, well, why is a live event $4,000 and online $997? Okay, it's like, okay, obviously lunch isn't that good, right? But in the live event, there's other things we're doing. We're going to be playing poker together. We have a cocktail reception. There's costs obviously involved in throwing a live event. So, by not participating in the live event, you don't get that full experience. However, you get all of the education and all the courses for just $997. So anyway, I think it's going to be a lot of fun. It starts on Sunday at noon Central. We're going to be talking about strategies, we're bringing in a sports psychologist who we've worked with, who's great on mental conditioning, and then of course doing live trading, and it's going to be a lot of fun. All right, hope it helps, and have a good night.